Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, August the 3rd, and I want to take just a brief minute to discuss exactly what markets did last week, as we had another positive week in the equity markets as we finished the month of July off with a positive start to the third quarter, with the S&P 500 finishing the week last week up 1.01%. The mid-cap index was up 0.41%, and the small caps, as measured by the S&P 600, were up 1.2%. So continuing that mantra of small leading large for the month of July and starting out the third quarter. And what I really want to talk about is we're right in the throes of earnings season, and where we're getting the corporate earnings reports in. And what's encouraging so far is that 80% of companies that have reported are beating on earnings. And they're not only just beating, but they're beating by an average margin of 64%, which is great, because if you remember, as we were, all the worries this year were recession, earnings recession. Well, we just got Q2 GDP in, our first read at 2.4% up for the quarter, which means that for the first half of the year, the United States is not going to be entering into a recession, and most economists now are on the side of either a soft economic landing or no landing at all, where the economy continues to grow and expand with inflation being present at a more muted level. So I wanted to talk about what's been interesting going in the environment going into earnings, and what's happening to a lot of these corporations when they're reporting their earnings and what's happening. So this year so far has really been a growth year. As of last Friday, the growth index in the large cap of the S&P 500, the growth aspect of the S&P 500, is up over 30% year to date. However, it's actually 32.5%. The value sector of the S&P 500 is only up 7.5%. So as we sit here today as well, the S&P 500 today is up 17.6%, with the equal weight 500 up only 7.5%. So 10 percentage points behind the index itself. So what does that tell us? Well, it's what we've been talking about for many months. We've had narrow leadership in the market. The largest cap tech names have been leading the market higher, and communication service names have been leading the market higher, and the rest of the market has not been participating. But what's been encouraging about this earnings season is, if you've been paying attention, what's really interesting is a lot of these mega cap tech names and a lot of these names that have had big run-ups this year, when they report an earnings beat and they reaffirm guidance or even up guidance, you're seeing profit taking, and you're seeing those stocks being sold off, down 2-3%, and the average of these mega cap names that are reporting that beat, the next day their stock as an average is down 3%. Well, what this is saying to you is the professional investors and investors are taking their profits from these big cap tech names, and they're redistributing that wealth into more cyclical names, as the fear of the recession that was dooming or looming or to come are waning. So their investors are saying, thank you for this nice run up. I will take my profits here, and then I'm going to reinvest that into the industrials, the materials, the healthcare, the sectors that are going to benefit from an economy that continues to grow, that are more cyclical in nature. So as I said last week, we are in a new bull market, but markets don't go higher every single day. We had a little bit. We finally had that 1% pullback yesterday in the equity markets off of the Fitch downgrade of the U.S. Of the United States. While River Place will tell you that downgrade we don't think has much material impact on the overall health of the United States and the United States economy and its debt moving forward. We find it, like a stock analyst downgrading a stock after all of the selling has happened in the stock, kind of late to the party. We don't foresee that being an issue for markets moving forward. Markets are really concerned right now on earnings, and watch the 10-year Treasury. As the 10-year continues to march higher, that has been, when it's above 4%, has kind of been a ceiling for stocks in the equity markets. So as we speak, the 10-year is now above 4%. Markets have recovered today on Thursday, August the 3rd at 1:10 p.m. from a down level this morning, and that's what we like to see because we are still seeing that positive, strong money flow, which means money's wanting to come into this market. So as always, if you have questions on how to navigate earnings season or where to take advantage of opportunities in this market when we do get these pullbacks like we saw yesterday, call us. We'd love to talk to you and help you navigate through that. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Thanks so much for watching.